Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the gold market. Now, yesterday we have discussed what analysis and investors on the Forex market think about the recent statement of the Fed, what forecast we have, how it could impact on the Forex market. Today's time has come to take a look at the opinion of the gold traders, what they think about the current situation. Well, on the gold market, actually, by my view, it's a bit more simple situation because you do not need to be a prophet to make the conclusion on the recent Fed statement and how it could impact on the gold. You just need to use the common sense. So if before the Fed statement, when we have no clarity on the tapering, on the possible rate change, on the Fed expectations on the gross domestic product and inflation, gold shows really anemic action, shows very weak performance, no reaction on even on the potentially supportive factors such as the poor payrolls, diverse statements from the Fed. Actually, there was no reaction, and market participants haven't increased any participation on the market. So we did not see the big jump in open interest in the market. Well, in general, interest among the investors to the gold market currently stands relatively low. Now, just suggest what we should get when we have date of the starting of the tapering, more or less clear. It will be November, December. We know that the tapering should be completed in the middle of the next year. It means that the 120 billions that is bought monthly by the Fed from the market will be finished, and all these bonds will remain on the market, how it could impact on the interest rates. And currently, we have the expectations that rate will start to change somewhere in the September, October, November of the 2022. Additionally, we know from the Fed statement again that the pace of the rate change might be a bit faster than it was suggested initially. How do you think whether this statement in general positive for the gold or not quite? So I think that the second conclusion is fair. So definitely currently gold stands under more pressure from the anticipation of the Fed policy. And if we'll take a look at the other indicators in the sentiment on the market that we have, performance of the SPDR fund, you will see that it stands relatively heavy and poor. So I do not see any significant bullish breakouts on any statistics. Additionally, if you'll take a look at the comments from the big banks, for example, UBS has released the statement that they expect the average price of the gold in 2022 around 16 even. So it's difficult to count on some more or less bullish reversal in the near term. That also makes us think that overall background on the gold market is moderately bearish, which means in the medium term that we could consider such targets as we have 1650, for example, and even the 1540, as both of targets might be considered on some circumstances around the gold. In the very short-term picture, since we have the turmoil around the Evergrande, so if situation turns to its worst stage, that might provide some support to the gold in the shorter term. And actually, this is, I suppose, the only reason why the market still stands above the 1740 area. It's mostly around the turmoil with this company. All other things mostly remains the same on the daily chart. Situation stands very similar to the beginning of the Friday that we discussed. So performance the same, no significant changes have happened. And here we could say just a few things. So additionally to the old background that we have just discussed, we have very strong sell-off here and here, which makes the pattern a bit tricky. So that's why, although it stands in place, although it still stands valid, and it might be traded, if you would like to, it is possible with a stop somewhere below these areas. If you, for example, believe that the situation with Evergrande will be worse and gold really could show this pullback, you could try to buy. But my opinion is that in a more or less medium-term situation, personally, I do not like to buy right here and right now. I think that the bullish context is still not sufficient for taking the position. So for me, the background that we have currently weighs a bit more than the pattern that we have on the technical side. Although, as I said, in some circumstances it could work. On the lower time frame, on the 4-hour time frame chart, major condition holds by the gold, so you can see we do not have big pullback that we should not get, because, as I said, the logic of the market mechanics stands so that once market hits the OP, it already shows the major retracement, major reaction, right to the confidence. Now, this is the extension mode again. So we have the extension, contraction, extension. This contraction now stands in extension, and this extension should lead market to the next target, it's the XOP. It means that here we should not get too deep retracements. It already has happened. The major reaction already has happened. And you can see market stands in relatively tight range, which is good for current performance. Finally, on the hourly chart, as market was not able to proceed higher, it starts to form a kind of I draw it as a flag. Maybe you could draw it a bit differently. Maybe you could consider it like maybe pennant or something of that sort. It actually makes no sense, because while market stands in a tight consolidation here, right below the 30% level, anyway it will be bearish. So tight consolidation after a sell-off, this is the bearish sign, because this is classical bearish continuation pattern. So maybe market will try to show here some kind of the guardian steeple to sell, which also might be used for taking the short position. For instance, if we'll get guardian steeple to sell on Monday somewhere. So that's our view on the gold. We treat it as a moderately bearish. We do not want to buy at the current circumstances, despite we have potential pattern, bullish pattern on daily chart. But we think that it's too weak and has some features that is not typical for the potentially bullish reversal pattern. So we need to get more clarity on concerning this bullish pattern. So more bullish sign, more improvement from the market that it indeed turns up. Currently we do not see it, and chances on the failure of this pattern are significant. In this case, if market will fail and drop below this area, it means that we'll go below these lows, and correspondingly it means that we're going to the 1650 area. I hope that we will get the answer on this question maybe on the coming week.